investing that capital, putting those dollars to work for you 24/7, 365 is really the way to kind of compound and grow your net worth.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast, Passive Investing Edition. My name is Randy Smith, founder of Impact Equity, and I will be your host today. And really excited to have Arn Cenedella on with us today. Arn is the founder of Spark Investment Group. He owns and manages 1,100 plus apartments with a value of over 138 million. And something unique about Arn compared to the folks that we normally have on, he's been in the real estate space since 1978. So he is going to bring a perspective that few of us know, and we should certainly learn quite a bit from Arn. So Arn, thanks for being on the show.
Yeah, hey, Randy, great to be here. Look forward to having a nice chat, hopefully educating your listeners into the benefits of passive investing. And thanks for letting everybody know how old I am. So I started at 23. So yes, I've got a lot of time in the real estate business.
Very good. Very good. Well, why don't we just jump right in, Arn? Can you kind of walk us through part of your background and how you found this passive investing space?
Yeah. So like many middle-class Americans, I was taught kind of to go to school, do well in school, get a degree or two, and go to work. So I happened to end up with a master's degree in chemistry, and then decided that wasn't really where my passion was. So I returned to the San Francisco Bay Area, where my dad had a residential brokerage business in Menlo Park, California. He was a great mentor, both as a broker, but even more importantly, as an investor. When I started, he said, hey, the brokerage business is good to create the income, but if you really want to create wealth and financial security, it's more about investing for the long term. And so he taught me both the brokerage business and the investing business. I built a single family portfolio both in the Bay Area and in Austin, Texas. I seem to have a knack for picking pretty good markets to be in, and did that for about 35 years. Relocated to Greenville, South Carolina in 2014. Kind of continued the single family rental portfolio, single family rental business. And then a phone call with a local investor friend of mine here in Greenville kind of turned me on to multifamily, albeit through podcasts. And he gave me the name of a few podcasts, and I started consuming that information, learning about the multifamily business. Of course, I've been in residential brokerage, which to some degree isn't that much different than multifamily. It's still residential real estate, providing housing. And I have to say, I got excited about it, became kind of enamored, and slowly moved my single family portfolio to multifamily, started a multifamily investing business, and in a matter of a few years have made quite a strong transition into multifamily and have had some success at it.
Fantastic. Yeah, no, some success I think is a huge understatement. With 1,100 doors, that's clearly you went all in and went all in very quick. So congratulations. That's awesome.
This is Chad Ackerman, founder of Left Field Investors, and I'm inviting you to listen to our podcast, The LFI Spotlight. Tired of the Wall Street roller coaster? Discover how to invest in real assets as I interview syndicators, seasoned passive investors, and other experts every week. We'll help you learn about cash flowing syndications, bringing you closer to financial freedom. Visit leftfieldinvestors.com to listen to the podcast, subscribe to our newsletter, and connect with like-minded passive investors. Join us today.
Now, you mentioned something that kind of caught my interest earlier. You said residential real estate is a really great way to make money, but investing in real estate was the way to create wealth. And I think that really talks to my audience, which is really high income earners that are probably stuck into, the stock market or bonds or mutual funds, things like that. So I think you're very lucky to have learned that lesson early on, because many do not. I'm curious if you can talk to that a little bit more.
Our W-2 income, our income from our job, it's highly taxed for one, right? Where typically income from real estate, whether cash flow or capital gain, is you generally taxed at a lower rate. So investing in real estate is, number one, tax advantaged. And certainly if you're a high wealth, high income individual living in a major metropolitan area where many are, you're going to be paying a fairly high tax bracket. In Silicon Valley, between federal and state, you're at about 50% between federal and state. And so it's investing your capital that you create from your work. What happens is that capital puts their tool belt on every day. They put their suit and tie on every day, and they go to work for you, whether you're at the Little League game or the beach or whatever you happen to do. So investing that capital, putting those dollars to work for you 24/7, 365 is really the way to kind of compound and grow your net worth. And I would submit real estate is a pretty solid way to do it. I have money in the stock market. I have money in mutual funds, but I've always invested in real estate. I think it offers a little bit more stability. And if you just look over the last 30, 40 years, the value of real estate has pretty much had a steady climb upward. And I've been through 3 or 4 market cycles. I paid 11.75% interest on my first house. I sold houses when interest rates were 16.5. Went through the S&L crisis, the dot-com boom, the dot-com bust, the Great Recession, Black Monday, and just continually the value of real estate overall long-term goes up. I think we know we have a housing shortage in the country, especially at an affordable price range. So I think there's just a lot of fundamental market factors that will tell us real estate long-term is going to prove to be a solid investment. And with the preferential tax treatment, it's really kind of a win to create wealth, which then gives people options, right? One can choose to keep working if they love their work. That's totally fine. But creating the wealth, the cash flow, the income gives people options to kind of create the life they want.
Awesome. Yeah, thank you. And I think that's such a great summary in something I could quote like a number of different times, because you're proving so many points that I believe in wholeheartedly. But you've been there to see the experience since 1978, which is great. So as an individual who was a high income earner in real estate, single family very, very well, because that's your core niche. You accumulate a number of different doors. How many doors? I'm just curious.
In terms of single family, I may have been up to about 30 at some point.
So at 30 at some point, you're making X amount per door. What was it about multifamily that kind of drove some excitement, or I think you said even enamored, which I can relate to that, with multifamily? Because 30 single families, if bought right and managed well, can kick off pretty significant cash flow and wealth generation. So I'm curious why the transition.
So great question. And so I think a couple reasons. One of the concepts I look at is return on equity. right? You buy a house, you buy a single family house at a certain price, you rent it, the value of the home goes up, your equity increases. And so when I looked at my portfolio wide and calculated a return on equity, not return on like cost or cash invested, but return on the equity in those properties, which had grown over a 5, 10, 15-year period, I found my return on my equity was probably 3-4% with single family homes. And I think you can do better in multifamily, you can do better in commercial real estate and get a higher cash return, cash on cash, or in my case is cash on equity. So that would be number one. I think number two is multifamily, dealing with larger assets. It's, people say it's a team sport. And so typically you're putting together teams, often 3, 4, 5 people. And by partnering with these people who have different skill sets than you're able to focus on what you do best and you let others handle what they do best. So I think the team aspect, the synergy of multifamily works and allows people to kind of do what they do best and get support from others. So multifamily, the other thing that's great is you can kind of rinse and repeat the process. So everybody's probably familiar with the BRRRR strategy on single family, and that's all great, but you'll find every house is different and your renovation game plan has to change. Where with most apartments, maybe you've got 2 or 3 floor plans to deal with, and you've got 100 units, 200 units all in one space. And so you can develop that game plan and just repeat it over and over and over. So there's some economies of scale that allow you to more efficiently improve the value of these properties as opposed to separate homes.
Interesting. So you made the transition from single family, and being a residential sales guy, there's somewhat of a team, I guess, depending on brokerage, that is a team game as well. But you identified that working in teams, you kind of focus on the things where you have an expertise. I'm curious, what is your superpower, or what piece of the pie are you bringing to the game, essentially?
Yeah, great question. And I would say, being a broker, it can be a team effort. I think as a single family investor, it's maybe less of a team effort. I think it's more of a solitary thing where your single family owner is handling all aspects of the operation, where on a multifamily you have teams. So for me, I'm kind of a big picture guy. I have a good sense of markets. I have a good sense of value. And I also look at some kind of qualitative factors in my investing. There's intrinsic value in property and location. Certainly the numbers are important, but there's a qualitative aspect, and I think I'm pretty good at identifying that. And then what I would say is I'm a team builder, and I'm pretty good at motivating people. So I'm not an operations guy. I'm not a day-to-day detail guy. And I can share a story. As I moved to multifamily, I was initially hesitant to kind of take the leap because I didn't have my team in place. And so there was a friend of mine here in Greenville, Brian Walsh, residential property manager. He managed some of my single family rentals. And I pestered him for 12 months, come join me on multifamily. And we looked at 3 or 4 deals, and finally we found one that we both liked, and he came on board. And now, of course, he's hooked because he's got 43 rentals or 60 rentals all in one spot as opposed to driving all over town. And so when I was able to get him on board, I knew the day-to-day operational aspect of it, the business, was taken care of. And in order for me to ask people to turn their hard-earned capital over to me, to trust me to properly handle it and take great care of it, I had to know I had the right person in place to run kind of the day-to-day thing. So I go out, find the properties, I hunt the deals, I work with the brokers, I raise most of the capital, knowing in my heart Brian can take care of the operation when we do actually acquire. And as you know, the way you property manage, the way you asset manage is really a critical factor in the success of a deal. So you want to work with people who are good operationally.
Love it. Yeah. So you're very much the relationship person with the brokers, with the investors. It sounds like you've got an amazing operations guy as well. What I'm personally finding at this point is that this business very much is a business and requires like an operations individual to manage the business of doing business, doing bank accounts and sending wires and all of those types of things that you don't even think about are happening. So it's usually beneficial to have somebody kind of leading that role as well. Have you guys kind of divvied that up, or do you have somebody that does that specifically?
Most of and of course here you're collecting rent from 200 tenants and you got to keep track of that. And you're paying this bill and you're paying that bill. So there's a lot going on. We've actually now brought on a third person to the team because Brian and I are both real estate guys, if that makes sense to you. He's in his late 40s and been a property manager for 15 years. Prior to that, he was a master plumber. So he kind of came up through the trades, which is also a nice benefit as part of the team because he understands how this has to go. So we're real estate guys. We're kind of hands-on real estate people. We're not great spreadsheet ninjas. We're not CFOs. We can keep the books, but as we acquired more assets, we identified a need for somebody more on the financial and accounting side. And about 2-3 years ago at the Best Ever conference, I met a guy actually in the mini masterminds they have ahead of time. And he was an ex-Bay Area guy who relocated to Cary, North Carolina. We became friends. He started investing in a few of our deals, and he's got a lot of personal real estate investing experience also. And he's at a point in his career where his career is pretty much on autopilot, if that makes sense. He knows his job and it's on autopilot. You know, he knows what to do. He's done it for 10 years. And that's kind of where he's at. He's chief financial officer of his company. So he's now coming on to be part of the team. And so now we've got kind of that analytical part, which we needed. And so now I think we're getting close to having a complete team. And of course, the growth is always organic, right? You start on an endeavor and you kind of do the best you can. You kind of bootstrap it. And then as you get into it, you understand there are other pieces you need to bring in. And so it evolves organically, at least for me. I'm not much of a planner. I'm kind of more a freewheel. And you know, Brian's very system guy, and so is Dan. So that's how it kind of works. So I've been knowing, well, I don't know if this is correct, but I'm not afraid to leap before I look, because I have confidence I'll land on my feet, and that's a good quality, but it's also has some negative aspects too.
Yeah, no doubt. I'm a ready, fire, aim guy myself. But you have the track record to show that when you fire, the aim tends to follow, and you've always landed on your feet, as you mentioned. So, yeah, so thank you for kind of walking me through kind of the evolution of the business as well. I think it's important for our listeners to understand, like, quite often you get a sales guy and you get an operations guy, and they think, let's take down a deal. And the next thing you know, like, the business is growing, the resources tend to, not the resources, but the, like, how much resources you have from a time and dollar standpoint start to constrict. And it's very scary to bring on additional people because you have to give away the dollars in order to invest in the business. And what I'm finding is the people that are more willing to invest in the business and build the infrastructure for the long term are the ones that are going to be successful and continue to be successful. So, yeah, hats off to you guys for really investing in the business to make sure you're creating not just a great deal for your investors, but really kind of a platform and a venue for your investors to come back to you years and years and years in the future. So that's great.
Yes, I mean, I built my residential brokerage business on referral, right? And there's nothing better than Joe, your client, telling Sally at the office, Arn's a great guy, So referrals are worth gold, and you get referrals, you develop advocates, right? By taking care of people, doing a good job for them. And for me, we all want to be compensated for our efforts, okay? No doubt. But for me, and I think for many of the best people in a lot of industries, it's about doing a good job. And for me, it's about getting the appreciation from my clients and investors, because that kind of enriches my soul, if that makes sense, when somebody communicates with you, hey, Arn, thank you. You did a great job for me. You really helped me solve a problem or whatever it is. I mean, that's worth gold to me. And yes, the compensation is all part of it. And I think if you approach the business from that way, you actually are better at it. And it's kind of a win-win for both your client and your own business.
Amen. Amen. Yeah, I think the very best compliment somebody can ever give you is a referral. And nothing feels better as somebody who's providing a service, is to get a warm intro from someone else that's looking for a similar experience to what they received. So let's if we can, I want to give you the opportunity to talk a little bit about your business. I want to cover your business, and I want to talk a little bit about the state of the market. And I try to be respectful of people's time. So let's run through Spark Investment Group. I know you have kind of investment criteria on your website, which I thought was really telling to the type of operation you run. You say, first and foremost, you like strong markets with job growth. Like, what does that mean? And how would a passive investor know that they're focusing on strong markets with job growth?
Yeah, great question. Job growth, population growth. There's a website, City Data, which is excellent to provide that kind of information. You can also get it through census data. And of course, there are many business and investment publications that kind of cover these markets. And so Greenville, South Carolina, and one of the decisions I've made, I believe real estate is very local. And knowing your local market is really critical to having a competitive advantage in evaluating opportunities and finding the best opportunities for your investors. And I know you raise for an outfit, and you're happy to share the name, that really specializes in a certain market, and that's their competitive advantage. And so they get access to the deals first. They don't have to go to CoStar to figure out the rents because they own 1,000 assets. So for Spark Investment, I've made a conscious decision to very much focus in Greenville, South Carolina. It's where my team is. It's where we live. And we know the market like the back of our hand. It is a growth market. It's between Charlotte and Atlanta. BMW and Michelin are here. Every X car BMW makes in the world is made in Greenville, Spartanburg. Michelin's North American headquarters is here. We're on the I-85 corridor, which goes all the way from Winston-Salem down to Atlanta. And I know you do some business in Texas, and you understand the I-35 corridor. And so when you're located on those major corridors, population grows, jobs come in. And I think the other thing that's happened with COVID and supply chain, I think we're trying to bring manufacturing back home. And how's it going to get along? It's going to be ground transportation. You know, we can't trust a boat's going to sail across the Pacific. So identifying those growth markets, I think, is key. And I've just focused in Greenville. I think the other thing I would say is we all know from our own practical experience that within our community, neighborhoods could change block by block, right? You could be in one type of neighborhood and go a mile away. It could be a total different vibe. And I think you only get that through local knowledge. So we like the market in Greenville. We feel we have a competitive advantage here. Population is growing. I've been here 8 years, and the growth in the investment has just been phenomenal. And so we feel it's a great market to invest in. So we're happy doing this.
Yeah. No, and thank you for that. I think it's important for the listeners to kind of hear the mindset that he's using to really do his due diligence on the city. He understands the traffic flows. He understands the ins and outs of the industries. He's looking at the population. He's looking at income trends. And that's what you want to hear out of an operator that is focusing on one area. And Arn, I love the fact that you focus on one market and you're not focusing on 4 or 5 or 6 markets, because you just can't get your head around and understand the intricacies of a bunch of different markets. So, you know, as I look through, you kind of had 3 other bullet points on your website. You say cash flowing assets, A and B class multifamily, and light value add, which all tends to make me believe you are a very conservative investor and operator, and you're not looking to make a quick buck. You want to provide good, consistent, solid returns to your investors. So, like, as a general blanket, can you kind of talk to conservative underwriting? Everybody seems to put conservative underwriting on their decks, but what does that mean to you?
Yeah, so one way I describe my approach is I aim to hit line drive base hits. I don't swing for the fences. I don't swing for the home run or the grand slam. It wasn't the way I was taught. My father was born in 1921. So he actually lived through the real depression. And so obviously he'd have a certain mindset about being conservative and understanding rainy days come. So my approach has always been kind of slow and steady. And I think we're starting to see in this space where some people got a little ahead of themselves and their investors are suffering somewhat because of that. So I think the other thing I would say is be reasonable about your return expectations, okay? Multifamily had a phenomenal 10-year run, a historic 10-year run. We had historically low cap rates, historically low interest rates. I don't think we're going to get the same kind of action the next 5 to 10 years. And so maybe we're not going to get a 25% IRR, but that's okay. Most of my deals, I project kind of 13, 14, 15% IRR. And if you can produce that with a relatively safe, low risk, nothing's no risk, low risk investment, in my mind, I'm happy making 13, 14% on my money. And if you do that for a 5, 10-year period, you're going to be dramatically ahead of where you were. And really what you want to prevent is the big negative hit. Just keep slowly growing that capital and income. So I don't like doing the heavily distressed deals. I don't like going into the real lower income type rental. I kind of like workforce to middle income. There's a little more consistency of rent collection, lower expenses. And it's a good sweet spot, and you're providing nice housing to people who work hard and deserve to have a decent place to live. So again, it's a win-win, creating nice places to live for people who deserve it, giving your investors solid returns. I mean, it's kind of a nice thing to do.
Yeah, no doubt. So, yeah, and I think you kind of talked to, certainly you mentioned the conservative nature of your strategy. You talk a little bit about kind of where you think the market is going, but I'm wondering, what are your thoughts on the market as a whole? You mentioned it might not be as strong as it will be in the past, but what are you sharing with your investors as to what they might expect in maybe the next 2 to 5 years?
Great question. So I'm still bullish long-term on real estate. Okay. In my life experience, what I've typically seen is 6 or 7 boom years. Maybe a year or two of a little turbulence, perhaps a slight little reset. Then maybe you have a year or two of flat. And that just sets the new plateau, sets the new floor for the next run up. So number one, long-term still bullish. And the key to real estate is using leverage properly. Don't over leverage. Ideally get fixed rate. But if you're an experienced operator and you really know the value add game and you have to go to floating debt and you take proper precautions, that's okay too. But you better be an experienced operator to do that. When I prefer fixed rate debt because I'm kind of more a long-term investor. And I think what we'll see in the next 4 or 5 years, I think the frequency of turnover of these buildings is going to be longer. We're not going to have those 2-year flips of apartment buildings. It's more investing for the long term. The other part of it is we go into our deals with a lot of cash in the bank. So in most of our deals, we have between $5,000 to $10,000 per unit strictly as operational reserves. We're not talking 2 months payment. We've got enough money in the bank. We can pay the mortgage for a year, even if we collect no rent. And I've even had investors go to me, Arn, why do you need such big cash reserves? And I go, well, Joe, yes, and maybe it does reduce IRR 1%, but we know we can handle anything we got. And so that's kind of the approach, because I think with real estate, I think we all understand if you don't get yourself in a situation where you have to sell, you're going to be dandy fine. You just ride it out. And so you're going to wait. So with me, I'm still aggressively looking to buy property, albeit it's difficult to find right now because there's still a disconnect between seller expectation and buyer reality. But if I can find good assets, that I can see a good long-term potential, I want to buy them. And even if the value goes down 2 to 3% over the next year, I don't care. The finish line isn't 12 months from now. The finish line's 5 years from now. And so the other thing that I've learned is when the market turns and starts going back up, it starts going back up pretty quick. It's like the horse is already out of the barn by the time you kind of really understand the market. So I'd rather get in a little bit early. And again, it's a long term. And I think most of my investors understand that. What I would say is people who invest, they understand there's factors that the operator can control, and then there's factors that the operator can't control, right? You and I, our teammates, our partners, we can't control what happens to the national economy. So I think the other thing I talk with my investors about is we're going to be prudent buying this asset. We're going to run it professionally. We're going to run it efficiently. We're not going to make any mistakes. We're going to do a good job. And at that point, I feel we've met our duty, our fiduciary duty to our investors. And so you can feel good about that. And just to circle back to one point, as a passive investor, if I'm looking for operators to invest with, I would want to make sure they maybe already own 2 or 3 assets in a given market. If somebody did 10 deals in Florida and then went to Boise, Idaho, I might not jump on, and did 10 great deals in Florida, I might not quite jump on board that first deal in Boise because it's a different thing. You don't have your team in place. And so I'd look for an operator that has a track record in a particular market because they got that team already in place.
You're preaching to the choir, Art. It's so like literally, I've shared almost verbatim what you said. And I partner with a couple of folks that work primarily in one market, and then they've jumped to other markets. And I purposely did not bring my investor dollars to those new deals. It's not that I don't think that those operators are going to do fantastic in their market. I just want to see a couple of deals under their belt and build the team and get the systems and lease the offices and all of those types of things before I start bringing our investor capital to it. So really, really good point. I do have a few questions I like to ask everybody, but before I do that, is there anything else you'd care to share with the audience? Anything specifically you want to draw their attention to before we kind of move on to the final questions?
Investing in real estate is about as close to a sure thing as you can get. And I just encourage people to do it. And the other thing is they don't have to go all in on their first deal, right? Spread it around a little bit, try a couple operators, see who you like, find people that you trust that counsel. Like Randy and I, we're in this space 24/7. We're going to conferences, we're meeting people. And so for a busy professional, they've got family, church, career. They maybe don't have time to evaluate all those contacts. So rely on people that you trust who are in the industry and can help guide you, and then just kind of test it, diversify, and over time, you'll see the people that you really like working with.
Love it. Love it. Great, great advice, Arn. Thank you. All right. So now for some final questions that I like to ask everybody. And keep in mind, the goal here is to help the newer passive investor. Is there a specific book or educational resource that you steer folks to in their early days and months and years of passive investing?
Well, there's books like The Hands-Off Investor. There's the Best Ever Syndication book. I mean, there's a wealth of information out there. And really, podcasts is another great source. So I think between those two or three, you're going to get some good information, and you can feel more confident about the decisions you're making. But Hands Off Investor and Best Ever Syndication book, I think, would be a good place to start.
Awesome. Yeah, very good. Those are referenced. I should actually get to the point where I say excluding those two, because 90% of the people say those two. But I think that's a good point. If you ask 10 people and 9 say the same book, then that's probably a good book to check out. So how can the audience find you, and what's the best place to see where Arn and what your group is doing?
Yes, so I'm active on social media, either under the Spark Investment Group name or Arn Cenedella. My website is investwithspark.com, so pretty easy to be found, and happy to talk real estate with anybody at any time.
Awesome. And then one final fun question I like to ask everybody. Do you have a recent bucket list item you've checked off of your list, or do you have one you're hoping to very soon?
Well, so great question. I'm an avid golfer, and I've had a lot of great golf trips. My life partner, Laura, and we've been together about 20 years. We're not married. She's a very independent gal, and she's never been to the Caribbean. Being a California born and bred, we went to Hawaii a lot of times. So I want to take her to the Caribbean, and we're going to do that February 2024 for our 20-year anniversary. So that's kind of a bucket list for me to share that with her and give her that experience. Hawaii's great. The Caribbean's a little different, and it's also fabulous. So I think that's our next bucket list thing we want to do.
I love it. My wife and I are big Hawaii fans, but yes, there's nothing like the Caribbean as well. So very good. Well, Arn, this has been a lot of fun. It's you confirmed my initial thought that you have a ton of experience and would bring a ton of value. So, Arn, thank you so much for being on the show. I really appreciate it.
Thank you. Been a pleasure meeting you, and let's certainly keep in touch. You'll be good.
Very good. And to our listeners, I will share, as I always do, just continue to get educated, continue to find your passion around this, and more importantly than anything, make your decision that you're going to invest in a deal, and do that as soon as you can financially. We're confident that once you do, you're going to see the same returns and rewards that Arn and I and many, many, many others have, and we're confident that you'll want to continue moving more and more of your capital over to this space. So thank you all again for listening today, and we will look forward to seeing you every Thursday from here on out. Thanks so much.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.